Hi everyone, this is 1.5 Understanding External Influences on Business, and today I'm going to be talking about taxation. This kind of lesson is great for accountancy, problem solving, research skills and getting you ready for the world of work. So if you look at the careers section at the top, grade 3, you need to identify the main type of taxes and then match them to who pays that and what form of ownership pays that form of tax. For grade 4 and above, you need to explain those main taxes that the business pay and why, and describe what happens if taxes increase or decrease. For grade 6 and above, you need to analyse those consequences with thinking about impacts of them tax increases or decreases, and it all depends on your level of justification and context whether you can get 7, 8 or a 9. So I want you to pause this video at this moment in time and look at the 9 questions here. How confidently can you answer these questions? Pause the video. Here's a bit of theory for you. So, income tax, this is taken off an employee's salary. The more income tax you pay, the less money you get in your pay packet. So, at the end of every month and every week, you will get your wage. This is how much you've earned. And there will be lots of deductions on there. There'll be national insurance, which I'm going to go over shortly, maybe pension contributions, and most importantly, income tax. That will be based upon how much you earn as to how much income tax you will pay. Everyone will pay it as long as they're earning over a certain amount. So this explains a little bit more about tax brackets, and they're different. So income tax is different for every single individual depending on how much you earn, and it's all based upon these tax brackets here. So everyone has the right to earn £12,500 totally tax-free. So when you go into the world of work or have a part-time job, I doubt you'll have any tax to pay whatsoever because you'll be earning under £12,500 per year. However, if you earn over that, you will need to start paying tax. So there is a basic rate on here. So if you are earning over 12,500, you pay 20% on what you earn over that. So for example, if I earn £13,000, then I earn £499 more than that. I will pay 20% of that £499 to HMRC. So it's over that bracket. So if you earn £160,000, looking at the additional rate, you will pay 45% of that 10 grand that you've earned over that. So the more money you earn, the more tax you pay. And this is all as of March 2020. So these things change all the time. Please look at .gov.uk for the latest updates if you're watching this after it's been created. Value added tax, also known as VAT. This is on goods and services. Everyone pays VAT, and VAT rates do change, but the standard VAT rate as of March 2020 is 20%. But again, these things change quite often. In the past, I've seen it at 15% and also seen it at 17.5%, but as of today, it's 20%. But these do vary depending on what products we're talking about, and I'll go into more detail next. So, VAT to be paid upon things like hot food, home deliveries, sugary snacks, alcohol, all that kind of stuff. VAT needs to be paid on them. Things that are exempt from VAT are fresh food, cold food, healthy food and drink. So they don't have any VAT on. Adults' clothing and shoes, you have to pay VAT on them. Ever gone for a pair of trainers, want them in a size 6? They're so much more expensive than a size 5. That's because they assume that them smaller sizes are for children, so they don't have any VAT, but as soon as it's an adult piece of clothing, then they're subject to VAT. Sanitary products is very, very controversial. The VAT for them at the moment is 5%, but we're all petitioning for VAT to be removed from such products. But you can sort of have a look on the .gov.uk website under VAT, and it will give you a comprehensive list of the different tax rates for different products, what's exempt, what's 0%, what's 20%, etc. It's quite an interesting bit of research there. Corporation tax. Now, this is tax paid by big companies. LTDs and PLCs pay this, so limited companies, and it's a proportion of their profits. Think the 2020 rates is 19%. So of all the profits that they make, 19% of their total profits will go to HMRC. And yes, that's an awful thing for businesses to do because it's a huge proportion of products, if you think about it, especially if you're making millions. However, these payments from income tax, VAT and corporation tax, they all go to inputting into the UK economy, which make a better quality of life. They plough into things like our NHS, our police force, pay for our education, get our bins collected, our sewers and our drains all working. So you've got to think that taxes are needed for a better quality life and a better economy. National insurance, just in case it's been mentioned, I want to add this, but when just before you're 16, back in the day we used to get a letter and it included one of these cards like on that PowerPoint. But now I think you get an email address. That email address will give you a code, and that code is your unique national insurance number. You will have deductions in your wage to pay national insurance, and you'll also have your employer pay towards your national insurance contributions. This contributes to the NHS, this contributes to the benefit system, and it also contributes to the pension. So when you go beyond working age, then hopefully you will get some of that money that you've been paying back through your working life back when you need it the most. Couple of essentials to add then, so matching them up to the right type of ownership. A sole trader, they will pay income tax and national insurance payments. They do not pay corporation tax. Limited companies will pay corporation tax, PLCs and LTDs. They will, but don't pay it themselves, also contribute to income tax and national insurance, but that's all on behalf of the workers. They're not paying that on their profits. Their workers are paying that on what they earn. And another thing to remember is HMRC, which is Her Majesty's Revenue and Customs, is the government authority that collects all UK tax from all of them pockets, and then that puts them in a pot. So it's HMRC that will chase that and that will expect records to be kept on earnings, profits, etc. So they're all your 1, 2, 3 mark questions. Anything bigger than that, what you'll need to do is look at consequences. What will happen if? So a rise in tax will, and any kind of tax will result in the same, but you've got to just think of the bigger picture. So from a customer point of view, taxes rise, whether it be VAT or income tax. Things will cost more and you'll have less money. Therefore, if you have less disposable income, you might spend less. It might be that you stop buying certain products. So for example, tax on alcohol might increase. You decide not to buy alcohol, or you switch to a cheaper alternative because you just can't afford to, because these things cost a lot of money. However, all in all, that raise in tax will mean the government have more money, and if the government have more money, then they will be able to invest, which will lead into an improved economy. Note here in the red, I've just tried to demonstrate the therefore, this results in, however, which will lead to, and these are all the kind of connectors that you need to get really high marks for a grade 6 or above. From a business's point of view, raw materials are going to cost more if taxes rise. So if VAT rise and then they've got to buy products, it might even mean that, oh my goodness, corporation tax has increased. That means that they have to pay out more, which means profit margins will be lower. If raw materials cost more, if they're missing out because taxes are higher, then that might means they've got two options. A business can absorb the cost, which means lower profits. Shareholders, stakeholders are not going to be happy because we're not going to get a return on investment. Or they can go, I'm going to pass on them rising costs to consumers, which might mean a result in price. So they might change their price. If they change their price, then that means it's a bit higher. Then a customer might think, well, that business hasn't increased their prices, but this one has. So it might mean a shift in brand loyalty, could decrease sales in the long term. And what you need to do is tell that story about what the knock-on effect of that would have. It's that detail in the story that will get you the grade 9. So back to the think question in the activate. At a budget taxation meeting, they've decided taxation's increases are necessary to provide better public health service and benefits. Which form of taxation would you increase and why? So, is it income tax? Let's tax the working population. Is it corporation tax? Let's increase taxes of the big businesses, the PLCs and the LTDs who are making a lot of money anyway. Or do we increase VAT? Let's put all products and services up by maybe 0.5% and let's get us money that way. Which one would you go for? Taxing the worker, taxing the business, or putting a tax on products and services? You need to fully justify your answer. Think of the pros and cons of at least 2 options. Think about what if, and it depends in your answer. And maybe think about a different point of view, a business's point of view, a consumer's point of view. Always conclude with the recommendations of your choice. There is no right answer. You just have to justify the right one for you. You need to spend about 12 minutes on that question, so good luck. Now, little bit of a review now. Looking at the 12 questions that I gave you at the beginning of this video, how many now can you answer confidently? Feel free to rewind and go back to anything that you want. And question 9, it's a little bit of new learning there. There is other forms of taxation which will be coming up in theme 2 in year 11. Good luck.